Good morning, hello and welcome to Trading Hour. I'm Surabhi Upadhyay and with me is Prashant Nair, and what we've got is a green screen but one that seems to be slipping as well. So yes, the market did open gap up, but global cues are more mixed today. It's not as big a roaring rally as what we had yesterday on Tuesday, and Asian markets are also slightly muddled and mixed up. For us, the Nifty has been cooling off from the highest levels. We were almost at the 9,000 mark, and since then we've given up a little bit. What's the problem? Again, the Achilles heel for this market continues to be the financial space. And if you look at the Bank Nifty, for instance, right now, it's already in negative territory, and that continues to be a trouble spot. Add to that, big boys, TCS and Infosys from the IT space are slightly weak. So that's an added issue for the bulls. But on the upside, you still have Reliance holding up the tall end for the market. There is some buying on consumer stocks like ITC, Britannia, and Nestle, etc. That's also evident. So we do have some counters, but banks are once again looking quite troublesome this morning. Prashant, good morning.
Surabhi, hi, morning. Yeah, absolutely. Banks are the problem, and they have been the problem for a while. As I've been highlighting as well over the last couple of days with those retracement numbers, etc., basically showing that the bounce from the lows was weak and it's giving up the gains the fastest. Whatever weak gains it had, they have been given up at a very, very fast clip. So there you go. The Nifty Bank is down about 0.1%. I want to talk about Bajaj Finance right on the top of the show, Surabhi. The stock's at about 1976. And actually, it's had a big swing. The high today was 2023. The low today is 1935, and it's bang in the middle of that range from the high to the low. Gautam Chugnani is Director of Indian Financial Services and FinTech sector at Bernstein, and he's joining us on the Bajaj Finance numbers which came through yesterday. The reason we have Gautam back with us is because he was on the channel less than 2 weeks ago, and he was probably one of the first to emphasize on why we need to look at moratorium customers and the bounce rates, and how those two things could actually tell us or not tell us a lot about what's going on with financials like Bajaj Finance, amongst others. And that is exactly what has happened. Gautam, good morning. Great to have you with us here. Thanks very much.
Hey, Prashant.
So the moratorium customers are, the percentage of loan value is 27%, bounce rate is 36%. Tell us, how should we read this?
Look, bounce rate is essentially the unpaid balance. Essentially, when customers try to pay or when Bajaj tries to present the checks or present the direct debits, those are the ones where the customer hasn't paid. So those are that's the superset. Moratorium is something that Bajaj goes and selects off that list, saying these are the eligible moratorium customers. So the way to interpret is that 37% of the of the loan book bounced, and of that 27% were given the moratorium. Now the question is, of the remaining 10%, is that uncollected balance, or is that something where the customer subsequently paid? And that is something the management should clarify, because some of these customers could end up being moratorium customers, but that 10% could likely be the unpaid outstanding balance.
So what is your understanding? Have you had a chance? Have we had clarification? There are lots of queries, but do we have clarity to some degree from the management?
Look, management is, the moratorium number they declared was as of a particular date. The bounce rate was the April number and the May number. So the bounce rate keeps moving. So I don't think the management clarified that. But the way to interpret, as I said, is, but the bounce rate is the superset of which Bajaj would decide whether these customers are approved moratorium. One thing the management did say that the ones where they thought the credit quality was not adequate, they have not been given moratorium. Now, does that apply to the entire 10%, or a part of that? Was not clear.
Gautam, someone sent me clarification from the Bajaj Finance website, basically saying that
yes,
bounce is not charged if a customer has taken moratorium within the right time. Yeah, so I mean, so that points us in a different direction, right?
No, so what happens is when a customer bounces, essentially there's a penalty, which is what Bajaj charges. So that clarification essentially says that if you move from the bounce to the moratorium, then obviously you won't be charged that penalty, and that's all that clarification says essentially.
Okay, fair enough. Now, sort of take that into account, all of the bounce and the moratorium, and tell us what should we expect, Gautam? I mean, what does this mean for investors who are trying to price in the risk going forward?
Yeah, so I think management said, so first of all, the disclosures yesterday, I mean, the fact that we're having this discussion is interesting because we can't have this for any other bank. So this was the best in class disclosure. So highly appreciate that from the management. I think, and that's why there was a lot of comfort because people could see the numbers very clearly on a month by month basis, which was completely absent when it came to even large private sector banks. So I think the next question is twofold. How much of this, and let's just start with the moratorium number, and maybe that number expands if the moratorium extends or for any other reason. But let's just start with that. How much of that is good credit and bad credit? And I think that's not sort of very clear because the customers who have opted for moratorium could just essentially just be saving liquidity. But I do believe basis our sort of channel checks and the kind of work that we have done, that not all moratorium customers are the ones who are saving liquidity. Many of them have been on the edge. Many of them, there's been a genuine collection issue. You've not been able to collect those loans, which is what I was alluding in the last interview. So I don't think we put a number to it. The management has said, the usual credit cost is 1.6%. Management kind of indicated yesterday that this could be double, which is what they had painted as a sort of scenario 3 in their last call. I do think that the number should be more than that. Essentially what management has kind of given as the worst case, which is about 3 point, which is the double of their credit cost. So in a way, management is right that not all moratorium is bad credit. But at the same time, some of this will flow into the delinquency bucket, which will be apparent in the next quarter or so. So that's one. So first, obviously, investors want to size that. The second aspect is essentially, they said they've essentially stopped lending on the unsecured business. And obviously, some are in red zones, some are in green zones. But on the unsecured business, they're essentially going slow because of this collection issue or the bounce issue that they're having. So fundamentally, what happens is the operating profit or the earnings of the company obviously start shrinking. The fee income shrinks, the NII starts, obviously because of the disbursements, the overall P&L starts shrinking. So I think there are two uncertainties. One is how much does the operating profit hold compared to last year, because the business is kind of shrinking. And second is, what's the size of this bad credit out of that moratorium pool? And once the investors are able to kind of assess that, that's when the stock will start. You'll be able to price that stock. But until then, the stock will remain choppy.
Okay, so those are some of the things that we'll have to watch out for. Gautam, so let's sort of try and pull back a little bit. I mean, this quarter, the bigger numbers, I mean, it's only 27% moratorium, where you're seeing other NBFCs report 70 to 80% of the book under moratorium. Slippages also didn't kind of rise through the roof, at least right now. But are you building in that scenario as we go forward? And then what about, the growth in AUM itself? Because we're looking at a post-COVID new normal. And, what's the kind of AUM growth, if any at all, that you're pricing in for this year?
So I think when we had last looked at estimated this, so clearly the March numbers are not indicative of the slippages. Still March, everything was fine. Till 22nd of March, things were fine. It is post-March, which is when all of this build up and the bounce has kind of played out. So none of it will show in the March numbers. On the AUM growth, I don't think that they get to normalize operations until second half of this year, which is what we are building. Usually they would, they would kind of they would have the loan book growth would be on an average 25%. It's unlikely that, at least in our estimates, I don't think they'll cross 10% this year, even if we optimistically assume that by quarter 3 Diwali, they start disbursing. Because, at one hand, you're collecting loans back, and on the other hand, you're disbursing. And that is a very difficult situation for an NBFC to start growing. Obviously, this is a better NBFC than other NBFCs. To your question around the moratorium and the numbers with other smaller and sort of other segmental NBFCs. So this is a better quality NBFC, but obviously, I don't think they get to growth till very late this year. Likely around Diwali. I mean, if one has to be hopeful.